Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia was higher in early trade today, tracking the upbeat performance on Wall Street overnight. At 9:10 a.m., the FPM KLCI added 4.83 points to 1,592.74 after closing at 1,587.91 yesterday. The index had opened 1.35 points higher at 1,589.26. Market breadth was positive with 204 advancers edging out 180 decliners. Another 274 counters were unchanged, 1,986 untraded, and 112 suspended. Turnover was at 183.63 million shares worth 141.54 million ringgit. Rakuten Trade Senior Berhad Vice President of Equity Research Tong Pa Leng said Wall Street closed on a high yesterday. His sentiment boosted by expectations of a Federal Reserve rate cut next month. He said nonetheless, tech bellwether Nvidia fell in extended trading despite posting solid earnings as traders were concerned about its purported sales of chips to China. Meanwhile, the U.S. 10-year yield eased to 4.24%. On the home front, Thong said the FPM KLCI reversed the previous day's losses to close at the day's high, supported by apparent local institutional buying. He added, contrary to our initial concerns, we deem this immediate rebound encouraging as it demonstrates the market's resilience. We expect the index to trend within the 1,590 to 1,605 range today. Among heavyweights, Maybank rose 11 cents to 9 ringgit and 90 cents, Public Bank added 3 cents to 4 ringgit and 36 cents, and CIMB Group improved 1 cent to 7 ringgit and 47 cents. Meanwhile, Tenaga Nasional eased 4 cents to 13 ringgit and 44 cents, and IHH Healthcare was flat at 6 ringgit and 79 cents. In actively traded stocks, Sime Darby climbed 6 cents to 1 ringgit and 96 cents, and Tanco Holdings added half a cent to 72.5 cents. Nationgate Holdings shrank 3 cents to 1 ringgit and 37 cents, and Ecovest eased 1 cent to 37.5 cents, while TWL Holdings was flat at 2.5 cents. On the index board, the FPM Emas Index advanced 27.83 points to 11,817.07. The FPMT 100 index rose 30.60 points to 11,591.44. The FPM Emas Sharia index improved 5.76 points to 11,777.62. And the FPM 70 index increased 23.50 points to 16,593.09, while the FPM Asia index slipped 4.81 points to 4,742.14. Sector-wise, the Financial Services Index jumped 130.34 points to 18,212.90, and the Plantation Index added 27.88 points to 7,607.28. The Industrial Products and Services Index eased 0.51 of a point to 164.03, and the Energy Index narrowed 0.44 of a point to 747.69. We shall now look at the performance of our local currency. The ringgit opened flat against the greenback on Thursday as investors await fresh leads ahead of key U.S. inflation data. At 8 a.m., the local note stood at 4.2335 or 4.2365, the same as yesterday's close. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Abdul Rashid said the ringgit could move within the 4 ringgit 22 cents to 4 ringgit and 24 cents today, driven by possibilities of profit-taking as traders are wary about the U.S. Personnel Consumption Expenditures (PCE) inflation report tomorrow. Muhammad Afzal said the US dollar index DXY was generally hovering around 98 points as traders remain anxious about the US Federal Reserve's next move in September. Federal Reserve Bank of Richmond Tom Barkin indicated that he foresees modest adjustment in the interest rates in the next meeting as he expects small variation in the economy. In the early session, the ringgit was traded lower against a basket of major currencies. It slipped versus the euro to 4.9312 or 4.9347, fell vis-a-vis the Japanese yen to 2.8737 or 2.8759, and weakened against the British pound to 5.7169 or 5.7210. It also traded mostly lower against other ASEAN currencies. The local note weakened versus the Singapore dollar to 3.2940 or 3.2966 and declined against the Thai baht to 13.0631 or 13.0786. The ringgit was flat against the Philippine peso and the Indonesian rupiah at 7.40 or 7.41 and 258.6 or 258.9 respectively. And now moving on to commodity updates. Oil prices settled higher on Wednesday after data showed a larger than expected drop in U.S. crude inventories as investors weigh the potential impact from new U.S. tariffs on India. Brent crude futures were up to 83% or 1.2% at US $68.05 a barrel. West Texas Intermediate crude futures gained 90 cents to 1.4% to $64.50. Both contracts fell by more than 2% on Tuesday. U.S. crude inventories dropped by 2.4 million barrels to 418.3 million barrels last week. The Energy Information Administration said, compared with analysis expectations in Reuters' no poll for a 1.9 million barrel draw, U.S. gasoline stocks fell by 1.2 million barrels compared with expectations for a 2.2 million barrel draw. Distillate stockpiles, which include diesel and heating oil, fell by 1.8 million barrels versus expectations for an 885,000 barrel rise, the EIA data showed. Phil Flynn, a senior analyst with Price Futures Group, said the gasoline demand number is supportive and shows a number of people getting ready to travel over the Labor weekend. This is the crescendo of the summer driving season, also the last big hurrah for the summertime gasoline blend. US President Donald Trump's doubling of tariffs on imports from India to as much as 50% was also in focus. The tariffs in response to India's purchases of Russian oil, which took effect on Wednesday. There was no sign of supply disruption so far, but uncertainty over whether the US will target the oil flows is deterring some traders from taking new positions, said UBS analyst Giovanni Staunovo. While the immediate impact of US tariffs on Indian export appears limited, the ripple effects on the economy pose challenges that must be addressed. India's finance ministry said in its July monthly economic review released on Monday, Russia and Ukraine have also stepped up attacks on each other's energy infrastructure, worrying traders about supply disruption. Russia launched a massive drone attack on energy and gas transport infrastructure across 6 Ukrainian regions overnight. Ukrainian officials said on Wednesday, Ukraine struck Russian oil refineries and reporting infrastructure in recent days. U.S. Special Envoy Steve Witkoff said on Tuesday he will meet Ukrainian representatives in New York this week, and Washington is also in talks with Russia in an effort to end the war. Russia was made an upward revision to its crude oil exports plan from Western ports by 200,000 barrels per day in August from the initial schedule after attacks on its refineries last week. 3 people close to the matter said on Tuesday. New York Federal Reserve Bank President John Williams said on Wednesday that interest rates will likely fall at some point, but policymakers will need to see what the upcoming data indicate about the company's future before deciding to make a cut in September 16 to 17 meeting. Lower interest rates can reduce consumer borrowing costs and boost economic growth and demand for oil. And now moving on to corporate news updates. Penang recorded 12.5 billion ringgit in approved manufacturing investment for the first half cut of 2025, a 150% jump compared to the same period last year amid global uncertainties from tariffs and evolving trade policies. From January to June 2025, the approved manufacturing FDI foreign direct investment also amounted to 10.5 billion ringgit, representing 84% of total approved manufacturing investment in Penang. This reaffirms the price index. This reaffirms Penang's position as a top contributor of manufacturing FDI in Malaysia, accounting for 20% of the nation's total during the period. The United States, China and Cayman Islands emerged as the top 10 sources of FDI, collectively contributing 60% of the state's total approved manufacturing FDI. On the domestic front, Penang recorded 2.0 billion ringgit in approved manufacturing investments, representing 16% of the state's total and marking a 51% year-on-year increase. Chief Minister Chow Kun Yeow said despite the current uncertain global environment, the state once again punched above its weight, attracting high-quality investments that reinforce its position as a key player in the global value chain. He said this achievement reflects the continued confidence of investors in Penang's capabilities and resilience. The state government extends its deepest appreciations to all investors for their trust in Penang. Chow also thanked Malaysian Investment Development Authority (MIDA) and Invest Penang for their continued collaboration in promoting high-quality and strategic investments that strengthen Penang's role as the vital node in the global manufacturing value chain. According to MIDA, Penang ranked as the second highest contributor to approved manufacturing investment nationwide, accounting for 18% of Malaysia's total. The investment flows in the Penang span across 85 projects that are expected to provide 11,160 new job opportunities. Investment activities were largely concentrated in Penang's promoted sectors, namely electrical and electronics, machinery and equipment, and chemicals and chemical products, which will contribute 92% of total approved inflows for the first half of the 2025. Notably, half of these investments comprise new projects, while the other projects are expansion projects, underscoring investors. Backed by over 5 decades of industrial excellence, a robust supply chain and a sustainable pipeline of skilled talent, Penang continues to reinforce its position as a vital player in the global value chain and a thriving hub for investors to grow. And finally, wrapping up, we have major corporate developments and deals across Malaysia. IGB Berhad is partnering with the Johor state-owned enterprise South KCD Sdn Berhad to buy 2 parcels of leasehold land in Johor Bahru for 215 million ringgit. Managed Pay Systems Berhad has accepted a letter of offer worth 38 million ringgit from Mastercard Asia Pacific Pte Ltd to develop and operate the management-issued Mastercard placements. IJM Corp Berhad has entered into a supplemental concession agreement with the government to formalize the 15 km New Pantai Expressway extension and extending the precising NPE concessions period. HE Group Berhad's unit has Hexatag Engineering Sdn Berhad has secured a 56.7 million ringgit contract to provide electrical services and related works for a data center in Cyberjaya, Malaysia. Willow Glen is MSC Berhad wholly owned unit. Willow Glen Services Pte Ltd has secured a contract worth of 86.5 million ringgit from Singapore's Land Transport Authority to replace expressway traffic and communication system. Now that's a wrap for more development updates with me, Ainun Jara on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.